So, welcome everyone. I'm Alexander Mihalcea, and today we have on one of the industry leaders, Sethu, co-founder and CPO of Actor Technologies. Welcome, Sethu. How are you doing today?
Hey, thank you, Alex. Thanks for having me. I'm doing well. Really excited to have this podcast with you. Looking forward.
Yeah, awesome. And I'm excited to have you on the podcast today as well. And I'm sure you're going to be of great value for the audience.
Thank you. Absolute
Now,
pleasure.
before we dive in, could you give us a quick overview of what Actor Technologies does?
Sure. So, Ektar Technologies was born out of some of the problems that my co-founders and I experienced in our many years in banking. Yeah. So and we realized the power of technology and how technology can kind of change business models, change customer lives. So we were very clear that we wanted to build a technology company that would work with banks and financial institutions in solving many of the problems that banks experience in solving customers' problems. So, in a nutshell, we are a technology first company in the space of banking and finance. So, you could call us a fintech product company.
Yeah, okay, that's really fascinating. And
The company was set
basically,
up in October 2022. We primarily based we're in the UAE. We have a technology lab in India, and we have offices in Singapore, which is where we are headquartered, and the primary operating office here in Dubai. Um, yeah.
okay, that's very interesting. And basically, what inspired you to create SCAR Technologies? Was there a specific moment or experience that sparked this journey?
Yeah, so Alex, all three co-founders of Iktar have spent a number of years in the banking sector across multiple markets, multiple regions in the world. Uh, we experienced many problems that our customers were experiencing, and we realized at some stage that we were better off solving them being outside the bank than inside the bank.
Hmm.
All banks typically tend to become large, have their own restrictions on how fast they can move, how they can solve problems. And whereas fintech companies are a lot more agile, lean, find it a lot easier to solve problems. So, as the coronavirus was kind of mutating, this entrepreneurial bug was also mutating inside the
Yeah.
co-founders. And it was soon after COVID that we realized that we will step out and build this company. So what really inspired us was the problems that we were experiencing and our problems that our customers in the bank were experiencing. And we
Yeah.
realized that we were better off solving these problems being outside using the power of technology.
Okay, that's really interesting. And for example, what was your background before starting this venture?
Yeah. So interesting that. So I literally began my kind of corporate life or corporate career, literally walking the streets of Mumbai in India, selling credit cards door to door for Citibank. Those were really a kind of a defining time in my life, I must say. That sales job kind of taught me empathy, hustle. It taught me everything about customer centricity, the values that have kind of carried me throughout my life. So I
Yeah.
literally kind of began a journey 30 odd years ago with Citibank in India. And after that, I had an opportunity to move to Standard Chartered. I was fortunate to work in, again, multiple countries and multiple regions for Standard Chartered. I worked with diverse teams. I was lucky to hold multiple leadership roles in retail banking across multiple regions. I was I headed sales. I did product management roles, did business leadership roles. I was a chief operating officer for retail banking in the Middle East, Africa, and
Yeah.
Europe region. I used to head in my last role, I was heading the affluent client business for Standard Chartered in the region. So had 30 plus years of banking experience across multiple markets. And mostly if you ask me, in two really eras, an era before digital and an era that was post digital. So I was lucky to kind
Yeah.
of experience life across both the eras. And yeah, I think the years in Standard Chartered I would call was really the most learning ones, and that's what has then led to this journey to become an entrepreneur.
Okay, okay, I see. So also, could you share your journey from 26 years at Standard Chartered to launching your own fintech venture? Because I think this is very interesting.
Yeah, so at Standard Chartered, as I said earlier, I did don multiple, hats, and so one of the defining roles that kind of led us to where we are today is when I was one of the business leads for digital banks launch at Standard Chartered across Africa markets. So at Standard Chartered, we launched digital banks across 9 different Africa markets. The bank had a champion challenger strategy in markets like Hong Kong and Singapore. The bank used a challenger strategy where we launched a digital bank with a different brand.
Yeah.
Whereas in Africa, we kind of had a champion strategy where using the mother brand, we launched a digital bank. So that was quite interesting, and I learned so much about digital. I learned so much about customer behavior uh, that kind of then, as I said, led to this journey. In fact, that's where I really got close to the two co-founders that I have today in the journey. So Sandeep, although I've known Sandeep for last 20 odd years, who's one of the co-founders of the company, we really got close during that phase when we were, the business leads for the digital bank. And then Ram, who is the company's CTO and is the other co-founder of the company, was the technical lead for the digital bank that we launched, and
Mhm,
that's where
mhm.
I got to know Ram really well, and we got so close that, as I said, we ended up being co-founders and business partners, but more importantly, partners in life. Yeah.
Yeah, right, right, right. Makes sense. And because you mentioned this, what key shifts have you observed in consumer banking behavior over your career?
So Alex, maybe put this into say 5 key shifts that I have observed. Yeah,
Yeah,
one I would say is time poverty. Time is really now people have less time, less patience. That's a big shift that I've seen. Right,
right.
time has become, frankly, the ultimate currency. If you ask me, customers no longer tolerate friction in banking. Yeah, they expect everything instantly. They expect real time updates. They expect minimal effort. Yeah, gone are the days when a customer would walk into a branch, spend half a day filling forms to get
Mhm.
anything done. Right, today they expect everything instantly. So that's one
Yeah,
big shift that I've seen. Is time is now currency. There is very little time that customers have for banking.
yeah,
That's one for sure. I think the second is to do with how technology has got democratized, right? So everybody today has a phone, and the majority of them have smartphones. Internet is available freely. Almost everybody is connected. All of that has really led to digital redefining customer behavior, right?
yeah,
Today, customers expect banks to go to them as opposed to they going to the bank, right? So that's very
yeah,
true. So that's the other big shift where digital seems to be so pervasive that it has touched every every moment of customer's life, and obviously has touched banking. So that I would say is the second shift, and that has kind of manifested itself in many different ways in how banks do business. Yeah,
hmm,
I think the third one, maybe not to a great degree, but at least to some degree, is loyalty is not given. Uh,
yeah,
I
right.
remember growing up where uh, people would bank generations with one bank, right? So I think loyalty is therefore not given. You have to earn it every day now. I think especially the new generation, right? So are willing to kind of try new banks, try new services. So that's the other behavior shift where we are seeing where the modern consumer is a lot more value driven, is a lot more open to trying new things. uh, as a result, loyalty is no more given.
Hmm.
uh,
Right.
and customers still look for trust, customers still look for stability, but it doesn't mean that they are ready to accept frictions, they are ready to accept poor service, they are ready to accept that they don't get the value that they deserve. So I would say loyalty is no more a given.
Yeah, interesting
I think
point.
I think the fourth one is quite scary, which is expectations are sky high. I think consumers now expect uh, they expect the sky, right? So,
Yeah,
for
yeah,
example, they expect banks to be like Netflix and Amazon. They're like, if I can order coffee online, if I can hail a ride, the butt of a press of a few buttons, why can't my bank tell me or help me save better?
yeah,
So they expect really big things from not just from banks. I think from every company, every you know organization that they deal with, they expect a lot more. So I think expectations have really become sky high. That I would say is the other big shift. I think the fifth one to me is this whole generational shift, right? So the new generations, whether you call them, Gen Z or you know, etc., their expectations are different, and that is also transforming banking.
yeah.
So you can't today build a bank only for one generation. You need to build a bank for multiple generations in today itself. So there is the Gen Z who expect gamification, who expect real time updates, everything. Then you have the millennials who expect a lot more stability, who expect transparency, right? Then you have the boomers generation who still expect trust, stability,
Yeah, yeah.
right? Transparency. So I think as a bank, you have to today cater or build for these multiple generations. You can't consider only one generation. And because the digitally native generations are now in play, you have that is also beginning to transform banking. So those are some big shifts that I would talk
Yeah,
about.
yeah, yeah, interesting point. Yeah, yeah, sure. And for example, how has the relationship between banks and fintechs evolved from competition to collaboration?
Yeah, I think interesting, right? So I think it all when it all started, the narrative was fintechs are going to be disruptors. Yeah,
Yeah,
fintechs were almost seen as competitors to banks. But you suddenly, I think everybody is now realizing that banks have their strengths, fintechs have their strengths, and when each one plays to their strengths and they collaborate, what you get is a good partnership.
right.
So I think from being a, I think the word competition has given way to collaboration, and I think that the word disruptor has given way to a partner. So
Yeah,
we've seen that evolve. In fact, we, Ektar, right, we are actually a partner to banks. We solve some of the bank's problems so that banks can then solve their customers' problems.
right,
Yeah. Banks we recognize that have their own strengths. Yeah, and we as a fintech company have our own strengths,
right.
and
Yeah,
therefore I think we've now become partners and collaborators, and that to me is a big change in how it has evolved over time.
yeah, 100%. Yeah.
Yeah.
And for example, what unique challenges do traditional banks face in digital transformation?
I think multiple. One is for sure. I can tell you legacy systems. Yeah,
Mm,
banks are saddled with legacy platforms, and it's always a challenge when you keep putting band-aids every time to solve something new, right?
yeah,
So when you are building a new bank, you can build a microservices driven, API driven, platform bank. But the legacy banks have legacy systems, and changing that is a huge challenge.
yeah,
We've all seen how challenging a core banking transformation is. Banks that have attempted to transform core banking have faced challenges it takes years for you to kind of get systems changed. So that to me is legacy systems is one. I think a number two is really the agility. It's never easy for an established uh, old organization to be as agile as one needs to be in today's world. So they
Yeah.
do struggle with agility. Banks are all trying hard to become more agile, and I must say, having worked for a very large bank, that they've all improved substantially. But they'll always struggle to be as agile as a fintech company,
Right.
yeah, or as a new startup, yeah. I can give you our own example, right? I think we do close to now about three releases in a week, system
Mhm.
releases in a week. In the bank that I worked for in the past, it will be a real struggle to get
Yeah.
a release a month. Yeah, so that talks about the kind of agility I'm saying, right? So
Yeah.
it's a lot
Yeah.
more
Right.
easier for us. So I think that to me would be a second issue, agility. I think the third one is also the performance window. I've got to tell you this, that the startups typically get a longer window in terms of how they are judged, how they are measured for performance. Whereas banks, especially listed banks, are expected to perform for today and for tomorrow. And that's always a challenge as to how you balance, short term versus or medium term versus longer term objectives. And established banks kind of struggle with that challenge. I think whereas startups have it a lot more easier. The
Mhm.
startups may struggle for funding, etc., but the expectation is that startups will take longer to perform, right? To
Yeah.
kind of
Yeah.
generate performance that is expected of them, whereas legacy banks are kind of faced with that challenge that they've got to deliver this quarter results, this year's results, and also kind of build for longer term.
Right. Right. Right.
Yeah.
100%. And for example, because I think this is very interesting, could you elaborate on why the existing solutions weren't meeting these needs in the beginning of Hectare?
Yeah. So, we set out to solve two specific problems, Alex. So one is, how do customers how do customers get authenticated in digital interactions? So when we were in the bank, we realized that in a digital transaction or in a digital interaction, one of the key ask was, how do we verify that it is indeed Alex on the other side of the transaction? Right. So when
Yeah.
you're doing a non-face-to-face transaction, how do we ensure that we are indeed interacting with the customer who he or she claims to be? And therefore
Yeah.
we have
Right.
to authenticate customers, and we authenticated customers differently for different channels that customers used. So if a customer was using a call center, we had customer using a telephone identification number, or the customer service officer at the other end would ask you questions like, what's your date of birth, what's your mother's maiden name, what's the last credit transaction on your account. The objective was simple: to authenticate the customer.
Yeah.
Whereas when it came to, say, an ATM transaction, the bank had given them an ATM card and a PIN. So you would use an ATM card and a PIN. That is the way they authenticated that it was indeed the customer who was doing the transaction. Then it progressed. When it came to mobile apps, you now use a biometric, facial recognition, or a fingerprint to authenticate yourself. When it comes to online banking, you're still using user ID and passwords. So we realized there was a need for an omni-channel multi-factor authentication solution designed by bankers for banking customers.
So this is basically the QIC, right? Know your customer.
That's right. This is
Y-
goes beyond that, right? So this is each time you're doing a transaction, how do you authenticate? So there is one is an identity verification at the time of onboarding the customer. Then there
Yeah.
is a transaction authentication, or you authenticate the customer. So at the
Yeah.
time of onboarding a customer, you need strong KYC solutions in form of identity. We don't play in that space. But after you become a customer, how do you authenticate the customer when a customer is engaging with you over phone banking, call center, mobile banking, online banking, ATMs, or when you're doing a buying something on e-commerce. Today, when you
Mhm.
buying something on e-commerce using your card, you would typically get an OTP through SMS or email.
Yeah.
That's how
Yeah.
banks authenticate yourself. Now that has also created lots of problems. SMS automatically gets intercepted. Yeah, it has led to a industry on phishing and social engineering. There are
Yeah.
multiple problems related to authentication of
Mhm.
customers at the other side. So that is what we solve for. And our product's name is Egg Shield. Egg Shield literally means that you need one shield to protect both your consumer, your customers, and the bank. So through
Okay.
a single solution, we make it possible to authenticate customers. So giving you an example, Alex is buying something online on an e-commerce site. You're buying something on Amazon, you're using one of your credit cards. Instead of sending a SMS OTP or an email OTP, we would send a notification on your bank's mobile app
Mhm.
and ask you to verify yourself using your biometric.
Yeah. Right.
So we replace therefore the SMS OTP.
Yeah. Yeah. Yeah.
Yeah. So that's what Eggshield does. And it works exactly the same way whether you're doing an e-commerce transaction or you're using ATM or you're using the bank's call center. If you're using the bank's call center, you can actually verify yourself on the bank's mobile app. No
Yeah.
more
Right.
do they need to ask you questions like what's your date of birth and what's your mother's maiden name. You authenticate yourself using biometric on the bank's mobile app, and the customer service officer on the other side can speak to you.
Mhm.
Yeah,
Yeah. Yeah.
it
Interesting.
can work the same way on ATMs. You go to an ATM, you punch in the amount that you want, and then you get a notification on your mobile app, bank's mobile app, and then you authenticate yourself using biometric.
Yeah.
So it's one omni-channel authentication solution that came out of the problems that we experienced when we were in the bank.
Mhm. Yeah.
Yeah, so that's
Interesting.
one of the products. The other product that we have is so client acquisition remains a huge problem for banks. You know, whether it was in the traditional approach or now in the digital world. When it was in the traditional approach, banks would spend a lot of money opening branches, having lots of salespeople on the ground selling their products or distributing their products. Now, in the digital world, they still have to spend lots of money on Google Ads, Facebook, Instagram, still attract lots of customers, spend a lot of money to bring in new customers. We've created a distribution platform, a digital platform that enables banks to embed their
Mhm.
products on customers' everyday life. So, for example, you are reading newspaper. So Gulf News, one of our partners in the UAE, is a leading English daily. They get about 27 million visits every month. Yeah.
Mm.
So when you're reading news, you are able to actually get a credit product like a credit card or a loan, or you're able to open a bank account as you're reading news.
Yeah. Right.
That's one example of how we made it easy for banks to acquire new clients by enabling them to embed their products into customers' everyday life. So I gave you example of a newspaper. Now let me give you an example of a grocery retailer. Everybody buys milk, vegetables, meat every day. We have a partnership with one of the largest retailers here called Lulu Group. Now, when customers are buying milk or grocery or meat through Lulu's website or through Lulu's app, you will actually see credit card products, bank account products, loan accounts, etc. that's available to the consumer.
Yeah.
And you can then complete the journey digitally and get those products. So we've literally taken bank's products to where customers spend their life every day at multiple touch points. So that's the
Mhm.
second solution. Again, we work with banks. We don't compete with them.
Yeah. Right.
Yeah.
Right. 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 So this is a very interesting approach, a unique one. But for example, what drove your decision to focus on B2B and B2B2C rather than direct consumer offerings?
Yeah, I think it's interesting question. Thanks. So one is again having seen how banks operate, how consumers prefer trust and security, etc. We were very clear that there was no point in competing with banks. That we wanted to partner with banks. Similarly, we also realized if we have to reach consumers, there are already very large companies who have access to millions of customers. So, giving you example of Gulf News, Gulf News gets 27 million visits. Why would I compete with Gulf News and try to attract customers onto my platform, a
Yeah,
B2C platform? I am better off reaching those consumers through Gulf News or through Lulu or through another fuel retailer called Emarat. Emarat has got 1 million plus customers on their platform. They're all car owners. Why would I create my own B2C
yeah,
application where I attract customers? B2C typically is heavy cash burn, takes much longer to kind of break even. And then you are really competing with companies who have already attracted lots of customers who have very large client bases. So we were very
mhm,
clear whether when it came to our Egg Shield product or to our Excel product that we would deal with companies that are well established, who have already got customer trust, who have strong customer reach. We would rather do business with them rather than go out and compete directly with those through a B2C approach. So
yeah.
it made sense for us to do a B2B2C approach.
Right, right, right. 100%. And for example, how are you helping banks respond to digital disruption? Because you mentioned it, and I think this is very important.
Yeah, yeah. So as I said, in the digital world, the banks have a few challenges. One challenge really is how do they acquire new customers? So they've all built great products. They've
Yeah,
built great digital journeys. It's very easy for you to apply for a loan, apply for a card, open a new account. A few clicks, everything is done digitally. You still
yeah,
need to reach customers. You still need to access customers. You still need to go out and tell customers that this is what my product is. And banks have typically been challenged in that space, right? Which is where our platform, our distribution platform called Excel, enables banks to take their products and take their propositions, take their offerings to consumers through other digital ecosystems. So let's
mhm,
say you are a bank, I have a great credit card product, but now how do I reach customers? I
yeah,
can reach customers by advertising heavily on Google, Facebook, Instagram, have a lot of influencers who promote my product, or they can come list themselves with a platform like ours, which then reaches millions of customers through Gulf News, Lulu, Emarat, etc. So they
yeah,
get access and reach. That's how we solve or help banks deal with disruption, right? So that's one
mhm,
way. I think the second one is the egg shield product. In the new digital world, they're really challenged by how do they authenticate customers.
yeah,
How can they make sure that it is indeed the customer that they are interacting with? Which is where our multi-factor authentication product called Egg Shield helps them. Yeah, we actually do, what's listed by European Union strong customer authentication standards, based on what a customer has, what a customer is, and what a customer knows. Yeah.
yeah.
So our MFA product helps banks to meet the needs of those three vectors.
Right, right, right. And for example, I have curiosity by then. So when you talk to potential clients, what's the biggest misconception they typically have about what you do?
So, listen, big banks always are a little skeptical about dealing with smaller companies. Startups are always smaller in nature, right?
Yeah,
I think some of them have also learned through experience. Some of the startups have, many startups fail, and therefore, when they deal with a a startup or a fintech product company, they want to make sure that they're stable. Which is where we come in and say that, hey, listen, we people, the company was founded by people who have done banking for 30 plus years. So we have been on the other side for quite some time. So we understand what your pain points are, what your challenges are, or what your concerns are, right? So
Yeah.
we built a very strong company. We have a very strong advisory board who make sure that we do all the right things. So that's surely one of the concerns. The second concern is around, are you a partner or are you a competitor? Because the
Mm.
fintechs have typically been seen as I said, as a competitor, as a disruptor. There's always a little bit of a concern to say, do I partner with a fintech or do I compete with them?
Yeah, right.
Luckily, I think that has evolved. I think banks have now realized that they have their own set of strengths. Fintechs have also realized that they have their own set of strengths. So it's now kind of evolved into partnership. But that clearly is another concern that typically banks have when it comes to fintechs.
Right, right. And also, could you share a specific success story of a client who saw significant results using your solution?
Yeah, absolutely. So as I said, I'll perhaps give you a couple of them. One is our partnership with Gulf News, which is UAE's leading English daily. Yeah. Through our platform, we are able to customize personalized products and offer it to consumers in their everyday life. So it's very common for people to go to gulfnews.com, get their everyday news. Now,
Yeah,
along with their everyday news, they can also get access to banking products. So we've
right.
brought multiple banks on our platform, made their products available to readers of Gulf News. Yeah, that's one example. Another very good example is Lulu. Lulu is a very large retailer in the UAE where consumers go every day to their website to buy milk, vegetables, meat, etc. Again, we make banks products available to them. What we offer customers is convenience, choice, and value. I say
Yeah,
value because consumers can get significant both financial and non-financial benefits when they take or subscribe to products through these platforms like Lulu and Gulf News. So that's a very successful partnership model that we have already established in the UAE. The
okay.
second successful one is, one of the very leading large banks in the UAE use our Shield product to
Yeah,
authenticate customers. So for every interaction, customers can now use their mobile app. Yeah. So we ourselves have kind of established that it is possible to work with banks as partners and make ourselves, relevant.
okay, interesting. This is very interesting. And now, looking at the broader industry, what key trends are you seeing emerge?
I think it's fashionable to say AI, so I must mention AI, right? But genuinely, I do think that AI will help improve banking and bring banking to customers in a more efficient way. So I think the developments in generative AI, agentic AI, whatever you call it, generally AI will help transform the industry, and I think it will manifest itself in different ways. Maybe the first one to come could be productivity. It may have a big role in how it automates many of the processes, how it helps banks to improve productivity, and some of that productivity benefits will eventually go down to the customers as reduced price, greater value, etc. So AI, I can see, will play a kind of a big role. I think there will be greater partnership between banks and other companies. I think partnership
Okay.
is the way to go, right? So,
Yeah,
and
yeah.
partnership will manifest itself in embedded finance, open banking, all of that will happen, but it will primarily be that banks and other companies will have to work together.
Right.
Yeah. And within that, I was saying about embedded finance. So no more will banking remain a destination point. Banking will be available to you in your everyday life journey. Yeah.
Mm-hmm.
Like you've seen with BNPL, there will be more and more products that will get embedded into your everyday journey. I think
Right,
that's really, to me, is a second big trend that I'm beginning to see.
exactly. And in your opinion, what advice would you give to banks looking to innovate their services?
So, a couple of things. One, I think banks should resist the temptation of being a technology company.
Mm,
Yeah, I think often banks have tried to be a technology company by themselves,
yeah,
and I think experience teaches us that they are better off partnering with technology companies rather than building technology in
yeah,
house. Uh, they need to have a greater understanding and appreciation of technology. They need to think about using technology to transform banking, but I don't think they have to be a technology company themselves. So that automatically means that they've got to partner a lot more. Yeah, they have to
right.
become more agile. They have to be open to more partnerships, whether it is with technology companies or with fintech companies. Partnership to me is the way to go. And banks have to uh, banks have to attempt multiple things and see what works. Listen, the future, it's evolving so fast, you're never sure about what would work, right?
Yeah,
And I think banks have done well. Most banks today have, venture arms. And through their venture arms, they do invest or they partner with multiple companies and see what will succeed. See, a lot of these shifts, you are not sure about what will succeed, right? So, for
yeah,
example,
right.
now there's a lot of talk about stable coins. It's possible stable coins may transform how payments are done, but you're never sure about it. But I think
Yeah,
it's important that banks take bets on some of these shifts. Yeah, uh, learn to kind of see what works and what doesn't work, and they're better off doing it through a partnership approach.
yeah, sure, sure. And great advice, though. And as you wrap up, what's next for Actor Technologies? Any exciting developments on the horizon?
Yeah, so I think we've kind of reached a stage where we have introduced products. Iktar
Yeah,
has introduced few products. I think we have reached a level where we can claim that we have reached a product market level fit. Now we're getting into the scale up phase, and that's very exciting. Scaling it up is very exciting because the products that we have built have got global relevance. Although today we are
yeah,
operating in the UAE, what we have built has got relevance across the world. So therefore, scaling up this company is going to be priority for us, and we're really excited about that journey. Uh, there is quite a bit of regulatory tailwind that is happening in the sense that, for just to give you an example, in the UAE, the central bank has mandated that banks should stop sending SMS or email OTP.
hmm,
So banks cannot anymore send OTPs through SMS or email to authenticate customers. That has given us a lot of regulatory tailwind for our products.
yeah,
So really exciting times in that sense. So we're really looking at scaling up. Our goal really is to become a much bigger technology company that solves real problems in the banking and financial services space.
yeah,
And if you want to use our domain expertise, all three of us, all three co-founders have spent a number of years in banking. We understand problems, we understand real problems, and therefore we are quite excited about using that experience and expertise in solving real problems.
yeah. Sounds very fascinating, honestly. And for listeners who want to learn more or potentially work with Actar Technologies, what's the best way to get in touch?
I think the best way to get in touch with us is write to us on email.
Sounds great and perfect. And thank you for sharing those insights about you and about the company and about the whole story. And thank you for this amazing podcast session.